All right, so we're going to be on the 1 hour and we're going to be doing a top-down analysis, right? So let's first start off all the way here on the left and mark out the fair value gap that led me into believing that this could be a good trade setup to take, right? So if we look over here, this is the 1 hour. It doesn't look like a fair value gap, but on the higher time frame, this is where we had a 3-candle formation. And this range over here would be our fair value gap, right? And if we look at these lows, the following lows that the price continually ascended in, we did not test those levels, right? And so we pushed up, we had an uptrend, then we had a downtrend. And now if we focus our attention here to where I did end up taking this trade setup, if we look at yesterday's prices, this is where this previous daily low and this previous daily high would represent a range that we were in. Now, this is important because if you have your range marked out, then you know, okay, is the price in a strong uptrend or are we consolidating? Especially if this was the previous daily range. Notice how yesterday we dropped all the way down and then rallied and pushed all the way up, but we didn't make any significant progress in either direction because following that, we pushed down. And that's the direction that we are heading into today's London session, or at least when I took this trade, which was today. And so now if we zoom in on these candlestick formations, we can see how this consolidation, again, we're on the 1 hour, was occurring. And my attention right away was drawn to these 3 candles, right? These 3 peaks. As soon as the price spiked up and we had this wick rejection, and then we closed with this bearish candle, so this one over here, as soon as that happened, I knew that this is probably a good sign that the momentum is likely to continue. And that's where following the next bearish candle, that's where I had my entry. Again, knowing that we're inside of this range from yesterday's previous high and previous daily low, that helps us because we understand that, all right, this is probably going to be a more risky setup since we haven't broken out in either direction. We haven't significantly broken out above the previous daily high or below the previous daily low. And when you don't have a strong trend, you have to be a bit more cautious when it comes to holding on to your trade setups. I knew that when I saw the price create this bullish candle and then the bearish candle just came in and pretty much took back the progress that was occurring over here, and then we also had another bearish candle, I saw that as a sign that, all right, the momentum following that liquidity grab that occurred earlier, right, where the price spiked up and took out these 3 highs, right, that would represent a liquidity pool. I looked at this as a sign of, all right, we're probably going to continue pushing lower. If we look at this in terms of waves in the market, the price pushed up, then we dropped down, we created a higher high, but that's where we ended up closing back below the midpoint of this fair value gap. As let's recall, this green zone represents our fair value gap. So now you're basically looking at this fair value gap as being mitigated initially. So initially we did retest this, rallied a little bit, but the price didn't make a significant bounce. So this is actually a fair value gap flipping into an inverted fair value gap. And what inverted fair value gaps are basically fair value gaps that fail. When that happens, when a fair value gap is likely to fail, or at least short-term wise, if it's not giving you the momentum you want it to, that's where you can use the midpoint as support and resistance. Where previously to the left, this was rejected from the bottom, from the top, then again, the price pushed up, significantly closed below it, pushed up again, closed below that, and then we continued dropping down. My trigger on the 15-minute was following these candles. And so as soon as the price pushed up significantly and swept the liquidity here from the left, and then closed below this zone and retested it, that's where I knew, all right, the momentum is there on the 1 hour. On the 15-minute, we are flipping because now the fair value gap is most likely going from a regular fair value gap to, again, an inverted fair value gap. We're probably heading further back down. Really quickly, you guys can see how during today's news events, we didn't have anything super significant. So mid-impact news, so that's where this would represent mid or medium impact news. So nothing too volatile, nothing too crazy. Some people like entering trade setups right before the volatility kicks in, and that's fine, but you need proper risk management for that. I didn't get the best entry, definitely not the best entry, but I did get in regardless, and I held on to this trade for a little bit, and I ended up taking a partial take profit down over here. Now, this did not actually push all the way down to my main target, right? I thought that the price can potentially push lower and closer towards the previous daily low. If you guys recall from the 1 hour, the previous daily low was what we were waiting for the price to break out of if we wanted a continuation lower. That probably would have been a good runner to hold on to, but we didn't get that, and that's fine. And this is actually an example that I did want to include of where sometimes you're just not going to hit your main take profit. You might get a partial take profit hit, like in this case, and that's okay. That happens sometimes. You're not always going to get the main target. You're basically going based off of risk management. And yeah, that's pretty much all I have for this section here. Let me know if you guys want to see more case studies like these.